All right, so that's a pretty eye-popping number. $725 billion, up nearly 50% year over year. What's the motivation here? Why are companies all of a sudden deciding they want to break things up?
Well, what we're looking at is a really interesting year for corporate breakups. Whereas before people were looking at big is better, now we're looking at a more strategic focus. Companies are under pressure from their investors, they're under pressure from regulators, and they're also under pressure from their own balance sheets. So right now, it's a great time to look at what's not core and where are you going to double down on. Investors really want to see that people are focusing on a clear strategic path.
You know, one breakup that I've personally followed is the breakup of FedEx. They're spinning off their trucking business. The idea is to increase the valuation of both parts of that business. Is this a sign that companies themselves, they are paying attention to valuation, even if sometimes we don't think investors are, as we see a lot of high valuation stocks moving higher and power in the market? Do companies themselves, do they really feel like valuations of their companies and their different units, is that important?
I think they have to think about that. If you think about overall the conglomerate discount, this is something that corporates have to understand because their investors, activist investors, are right there on their doorstep talking to them about how the sum of the parts will often equal more than the whole. Also, you're looking at how businesses are thinking about how they can operate independently, how they can be more agile, and how they can cope with changing and the evolving environment that they're in.
You know, is there also something, I'm going to give you something, you can use this if you want, listen, you don't have to give me credit, an Ozempic overhang, because a lot of these deals, when we're talking about these breakups, they're in the food and beverage space. A lot of these companies, they try to figure out changes in not only taste, but also what consumers want, whether it's lower calorie foods or, you know, people taking these GLP-1s and just have, you know, less desire to eat snacks and potato chips and things like that.
Well, this is something that hit Kraft Heinz. You've got a merger from 10 years ago. At that time, all those synergies, everyone was excited about the synergy story, but those synergies were so hard that came in that then suddenly there's a question about investment. On top of that, you've got these changing consumer preferences. As you said, people are starting to think about more healthy foods. They're trying to think about cutting artificial flavors. Suddenly, you have, you know, there's you know, your key brands are facing growth problems. So what are you going to do? So this is one of these. This is one of the answers there. Is to separate out and focus on different areas so you can adapt to changing consumer preferences. And it's not just in food and beverage as well. It's also in other areas. Look at media and entertainment. We're not all watching traditional television stations anymore. People are streaming. So again, you see breakups linked to that, and disposals again.
We're seeing with our company right now, Versant, going to be launching sometime in the near future, spinning off from Comcast. I want to go to the other side of the coin, though, away from food and beverage to tech. And tech, it seems we're seeing just the opposite trend. We're actually seeing consolidation. I'm thinking Palo Alto Networks and CyberArk. I'm thinking some of the just M&A when we're seeing with a lot of these big tech companies buying some of their rivals maybe in the private market, but generally trying to bring talent into their companies. Why is tech moving in the completely opposite direction? At least it seems like.
We have an evolving landscape. There is obviously a shift in the regulatory environment under this administration. So there is a sense that there are some deals that couldn't get through before on the antitrust side that are now being able to be pitched. Whether or not they come through, you've got a number of bellwether deals there. One of the deals that we're watching very closely, for example, is the Wiz transaction. Because as you are looking at these larger transactions, previously that deal looked like it wasn't going to get, they decided not to go ahead with it because of the challenging regulatory environment. Now it's come to the table and it's actually been announced. But what we are seeing with tech firms is you have got this hugely evolving landscape. Something that I find incredibly interesting is how we are seeing the tech landscape evolve from this area where we're all looking at our multi-touch keypads to a world where we're going to be looking at AI interfaces. And that brings with it a huge need for M&A, whether it's looking at the user interface itself to cybersecurity, as we mentioned. So that's why you're seeing these kind of more stretch in the tech.
Listen,
tech
one last question, then we got to get out of here. These things are generally cycles. Sometimes we see the consolidation of businesses, then we see an unwind, then it kind of the cycle repeats itself. When we're looking at this unwind cycle, where do you think we're at?
I think we're going to see a lot more unwinding. We've obviously had a number of mega mergers this year. We're also seeing unwind. I think what's happened is we're at the beginning. Well, we had a reset in market conditions 2 years ago when rates went up, and now we're seeing the fruits of that. Corporates have to take action. They have to deal with a higher rate environment. They also have to deal with these consumer preference changes. We're also seeing mega mergers coming in. So I think there's a lot more to be done. Just to give you an idea, we're actively tracking 210 carve-outs, corporate carve-outs, 100 of which are in the US, and I'd be keeping a very close eye on names like PepsiCo, for example, that could come further down the line.